Hey guys, how's it going? This is Mark Guerra with Mortgage Resolution Advisors, and I got this guy here with me wearing a suit. What's your name? Oh yeah, Morris Henderson. Morris Henderson's here with me today, business partner.
The Morris Henderson.
Oh, the mortgage, the Mortgage Resolution Advisors with Morris Henderson.
Oh, help me.
So, do we have a topic today?
We actually do. We sure do. What is that topic today? You remember?
It's actually part two of a video we did, a week ago or two?
Yeah.
Loan modifications part two. So this is loan modification part two. There was so much information. We could probably do part 3, 4, 5, 6, but I don't want to talk about it no more.
Definitely.
So this is the last video, but it's loan modification part two.
Great. So, with this one, Mark, we're going to be talking about the pros and cons. Okay, so I thought it would be best for us to go into this video on just the pros and cons, because on our last video, we just wanted to give them some general information about loan modification. But I think that once they kind of get the point on what's the pros and cons, we'll be able to help them out in this area.
Okay.
So let me start off by saying that there are several benefits to doing a modification, but you and I, Mark, we're going to go over the pros, and we're going to go over those cons again so that people can understand, let them make their decision. That's the whole point, yeah. So, what they'll qualify for, and that's what's going to be the focus here. So, just as a reminder, to qualify for this process, you have to be able to show the inability to refinance your home. You have your existing mortgage is just getting behind on payments, and you face long-term hardship, okay? So these are some of the things that you must qualify for in order to go through this process, okay? So that's pretty much the process that we're gonna go into and elaborate more. So what do you think?
Sounds good. So what are we going to talk about first? The pros?
Yeah, let's talk about the pros.
All right, we're going to talk about the pros. So, number one, the most important thing, right? Avoiding foreclosure, right? To avoid foreclosure. I would say that would be the number one pro.
That's good. Then you're absolutely right. And that's kind of why we started this. We wanted to basically show people how there are going to be many ways to avoid foreclosure. So that's good. The other aspect of this is that, if you are behind on your payments, you would have to be able to you'll be able to resolve a lot of default status in this area when you are, for the pros of doing the loan modification. So you'll resolve a lot of that, if you're behind on the payment. So that's a good thing. The other aspect of it is that you'll be able to reduce any of those monthly payments, and they will now be affordable. So you'll be able to go back to affording your mortgage now once you do the loan modification.
Okay.
Yeah.
So let me ask you, what about your credit? You gonna suffer? Is that still the pros or the cons? We can talk about pros or cons.
Yes.
Okay, I was jumping.
Yes.
Okay, so you would suffer less damage to your credit,
right?
Mm-hmm. By doing this, there might still be a damage to your credit. I'll say that for the cons, but the good thing is you won't have a foreclosure, which is going to be the worst thing you could ever have, because that's going to be there for 7 years. You won't be able to really do much with the foreclosure. So I guess a pro could be the less impact on your credit, even though we'll talk about that there is some. Also, another good thing about it, because we're talking about the pros, is if, let's say you were in an ARM, a lot of people are like, what's an ARM? Well, that's whenever you don't get a full 30-year loan. They make it look like a 30-year loan, but you have to refinance within 3 years, 5 years, sometimes 10 years. Yeah. So those are called ARMs, so you do get it broken out into 30 years, but in 5 years, for example, you have to refinance. So that's another good thing about, okay, well, we're going to do a loan modification, and maybe they'll put you in a full 30-year loan, versus having the ARM, so they could, besides lowering your interest and stuff like that, give you a full 30-year loan, which I prefer way better than having to think, am I going to be able to qualify to refinance in 5 years from now? Or 3 years and things like that. So I think that's a pretty good pro.
Yeah,
right?
Yeah, absolutely. I mean, and you're absolutely correct. Basically taking the fact that you have an ARM, and you're going to now have it switched over to a fixed income. A fixed interest rate. So that's the other aspect of this.
Yeah, because some of those have raising interest rates.
Right. So now it's going to be fixed. So that's going to be pretty much a pro. Now, getting into the cons of the loan modification. Now, people are having hard times out there, and it's very tough for people to make payments, and often people make decisions on their emotions, Mark. I mean, and we understand that. but it's just very important for you to understand the cons now and what are the disadvantages of loan modification. So.
Yeah, because like I didn't really know there was any disadvantages. I've heard of people doing these, loan modifications. They're all excited. Oh, I got a lower payment. They lowered my interest rate. So those of you that might be watching might be like, what do you mean cons? This is the greatest thing that could ever happen. I'm not going to lose my house. They're lowering my payments. They might even lower my interest. What could there be wrong, with it? But as we know, it's not all like it seems, right?
Right.
And I know you've done a lot of research on that. And so let's say you had 20 years left on your loan or 25 years. They're going to automatically on a loan modification want you to do like 30 years. Sometimes you have 28 or whatever, or the full loan. You won't have the full 30, but let's say you have 29, you just got it and you couldn't afford it. They're going to try to get you into a 40-year, mortgage. It's like, oh my God. So it sounds like it's good, but it's not. I mean, it's gonna save you from losing your house, but you could be paying more than what's the house is worth, because now you're going to be financing for 30, 40 years. So, I mean, I would say that would be kind of a bad thing, right? So.
Yeah, I mean.
One of many that we're going to talk about.
Yeah,
so.
One of many, absolutely. And I couldn't agree with you more, so, you're in a position where you have a term longer than what you'd want. Of course, your payment's going to be lower, but then just imagine now you're in a position where it's almost like repurchasing your own home. And on top of that, now you are paying more than what the market value of that home is. That's crazy.
Yeah,
so
crazy.
That's let's just call it how it is. It's crazy. So you again, these are some of the cons that we look into when you're doing this structure. So just please take that into consideration when you're considering doing a loan modification. You're going to probably be purchasing your home all over again. So I don't know if you want to do that.
Yeah, because like I said, I thought, oh, this is the great thing. This is the best thing. They're trying to help us. But think about it. When you're buying a house and they do an appraisal, right? And they tell you how much your house is worth. Would you pay, more than what it was? I mean, sometimes you pay a little bit as a competitive market, but would you pay $10,000, $20,000, $30,000, $50,000 more? You could in some of these type. And how could you're thinking, well, how can I pay more? Well, one, all those payments that you're behind on your house, they're gonna, plus the late fees and all that stuff, they're gonna add it to the amount of the home. That could probably get you over. If that doesn't get you over, they're gonna remember all these fees, the legal fees, everything that they were gonna bill you. They're not gonna forgive all that. They're just gonna roll it all up and put it at the end of the loan
and add it on
top.
Yeah,
so you're gonna be paying all those legal fees.
That's
the actual modification fees to modify your loan. People say, why do I have to pay anything? They just modified my loan, it was done. But they didn't look at the fine print where all these thousands of dollars are being added on in fees, plus your late payments, plus all the payments you were behind on, and it's just all added on, and it's sad, but a lot of times you go through it thinking you saved your home, but really now you can never sell that house again, because no one else is going to buy that house and pay more than what the house is worth. I'm not saying to go through foreclosure. There's a lot of other options we'll talk about, but I would say that's another con, when it comes to these loan modifications.
Definitely, absolutely. I mean, back taxes. I mean, we can just keep going on, but just look at it like that. Everything's just going to be added on the principal of that loan, and banks tend to want to write off a portion of that principal loan for you by reducing that debt. But look at it like this: the liability for the income that is going to be taxed on that portion. It's just going to be a different type of option, and it's going to be applied to that primary residence. So you want to put yourself in a position where you're really, really carefully thinking, do you really want to do something like this during the times that you're in? And everybody has different situations, but just look at the cost instead of the benefit, okay?
Yeah, because it's going to be reported more than likely as a debt settlement on your credit.
That's
so
correct.
It's not like, oh, we did a loan modification, everything's perfect. It's not going to affect my credit. It's going to be reported as a settlement because you broke the original contract and they modified it, and they're making a settlement with you, an additional agreement. So it's not like your credit's going to, be good because you did this. It's going to save you, and it's way better than having a foreclosure on there. But it is going to be reported as that on your credit as a loan modification.
That's correct. Absolutely. You're right. You're right. Sorry for cutting you off. I know you want to say
Yeah.
more, but let me talk. God darn it. No. But Mark is right. It's going to be a headache, and there's no guarantees that you'll be able to even stay in your homes. The lender may even decide to encourage you to sell your property, because you're not going to be able to put yourself in a position where they're going to deny you. Some are going to be denied if you don't qualify, but then on the same aspect of it, they're going to find a way to immediately say, hey, you know what, we're going to have to obviously begin this foreclosure process. So, you know, you're not going to have any type of option. So you just want to kind of look at that when it comes to this process. You know, don't let them put you in a position of being denied. Always look at a different option that could be given to you in these areas.
Okay, so what you're saying is through the process, it's not guaranteed.
Right.
So you might be behind all these payments. You try to get this loan modification with your bank, but that's not a guarantee. So another con might be that they can deny you after wasting all this time. You're behind on more payments, and then they're like, "Well, you don't qualify for the loan modification, right?" Is that correct?
That's correct.
And then
Absolutely.
they could escalate the process, and then you can go back into the foreclosure if they did pause it for a while. What about if they actually do approve it and you miss a payment? Is that kind of the same thing? They can get you back into foreclosure immediately and get that process going?
Absolutely, Mark. They can pretty much just, if you miss a payment, they're going to take the house. They're going to just put it back in foreclosure, and they're going to escalate the process. So that
could be pretty stressful.
It could be very, very stressful. And again, we're not looking to stress anybody out, but this process can be very stressful. So very good point. Very good point. So there you have it. There are the pros and there are the cons of doing a loan modification. I think that's pretty fair enough. I mean, Mark, we could keep going on and on and on about this process, but that's going to be about maybe 4 or 5 more days of this, and we don't really want that. We just wanted all of you just to get a picture, a view of this process. So again, we do continue to ask everybody to subscribe to our channel and like our videos.
Yeah, and before we close it out real quick, I just want to do a quick recap because there was so much information that we went through. And like you said, we can keep going on and on. But look, guys, this is very eye-opening for a lot of people because everybody, like we said at the beginning, thinks loan modification, lifesaver, boom, let's just do it. And like you said, you're stressed. A lot of things are happening. A lot of people don't think straight. You don't read all the paperwork they give you. No one does. They know that. So there's so many things in there that we didn't even talk about today. Don't get us wrong. It's a good thing if you're going to lose your house and it's your only other option. But the reason we do these videos is to show you that it's never the only option. There's so many other options out there, and that's why we do these videos. You know, we don't charge anything. You know, we joke around and stuff on here, but it's free consultations. You know, we just want to pay it forward and help other people to avoid, you know, foreclosure is the most important thing. Losing your house, losing the equity in your property. You know, if we can help you to avoid those things, we did our job, you know, and at least give you advice and options on what to do. You may have to do a loan modification. Yeah. There are cases where it's a real good thing to do a loan modification, even if you're going to sell the home. And there's other, you know, little tricks that we can show you how to do where you can do a loan modification, even though you don't have a lot of equity in your home, to make it something valuable for you to where you can still sell that property or that loan. There's just so many things we're not going to get into here, but I'm telling you, it's worth the consultation because we can help anybody. Even if you owe the entire house, have no equity, we can get you out of that situation, get money in your pocket. If you want to keep the house, help you keep it. If you want to get a different house, downsize, you know, through our home exchange program, there's so many different things that we can do to help you. And if you have all these options, it's better than not having options, right?
Absolutely.
And we're not going to tell you what to do, but we'll get you advice and guide you on how to do that. So anyways, I didn't mean to interrupt you earlier. But yeah, you know, subscribe to our video, like it. I just felt like we had to kind of recap because there's so much information out there. A lot of people are probably blown away right now by all the negative things. They didn't know that all this stuff happens. I talk to people all the time, and they didn't even know all these different things they add onto the loan and extend it. I mean, you just paid the 5 years that's on your loan, and all that was interest only, you know, and when they redo it for 30 years again or 40, you just lost everything you paid on it for 5 years, 8 years, whatever you had paid. If it's too good to be true, sometimes it is. So just get that consultation. If you got benefit from this video, all we ask is for you to like the video, share it with a friend or somebody you know that might be going through something like this. There's a lot of, you know, tough times that we're in right now. And if we could help make it any easier, that's what we want to do. So thank you again for watching, and continue to share this video as many times as you can. Thank you.
Thank you very much.